Hi, I'm Susie Stewartson with UFirst Realty and the Summit team. I've got a special guest today, Kris Hocum with First City Mortgage and a subsidiary of Megastar Mortgage. Kris is an expert on conventional loans, and we're going to be talking about those today. Thank you, Kris, for coming in.
Thanks for having me.
So conventional loans, tell us about them.
Well, conventional loans are your more traditional loan, and they're powered and backed by Fannie Mae or Freddie Mac. But I think the biggest things is so many people think with a conventional loan that you have to have 20% down.
Right, I get that question a lot.
And you don't. If you're a first-time home buyer, or if you meet their area median income limits, you can buy a house with as little as 3% down.
Yes.
And even if you don't meet those income limits and you're not a first-time home buyer, you could do it with as little as 5% down. Side note, you are considered a first-time home buyer if you haven't owned a house in 3 years. So if
that's good to know.
If you owned one a while ago and sold it,
yeah,
you're a first-time home buyer again.
That's good to know. Little tidbit. Okay.
You know, if you're doing less than 20% down, you're going to have mortgage insurance,
right,
or PMI. Mm-hmm. With a conventional loan, that PMI is the cost of that is priced depending on your credit score, your down payment, your debt to income, how many people there are on the loans. There's a lot of factors into that.
Sure.
That's my job to help navigate that piece for you.
What about credit scores, though? Because I think a lot of people have questions about that.
You know, with a conventional loan, we can technically do a conventional loan with as little as a 620 credit score. Mm-hmm. A lot of times it doesn't make sense compared to some of the other loans until we get to 680. And that's really going to depend on your down payment and your scenario. But they are a little bit more stringent on credit score and some of those credit items. And that's where, in those cases, sometimes the government-backed loans might be the better option for us.
Okay.
You know, one of the questions with the PMI that I get asked is, when will it go away? And
right,
it does go away eventually. It'll automatically fall off when you pay your loan down to 78% of the original purchase price or appraised value, whichever was less. At 80%, you can request it off, and as long as you're in good standing, it'll go away. And then anytime after 2 years, if that new value has appreciated enough
right,
to put you at 75% or better, you can contest it and potentially get it off then as well.
And do the homeowners need to get their own appraisal? I thought that they did.
They will,
yeah,
through the contestment process.
Oh, I see.
And
okay,
so you'll contest your mortgage insurance, and they'll walk you through what you need to do cost-wise there.
Okay.
But it's possible. I just got mine off my house.
Yay!
You know, one of the neat things with conventional compared to the government-backed loans is they have less of a stringent appraisal guidelines, and so sometimes things that
right,
won't be approved, either whether that's a condo or appraisal conditions or things like that on an FHA loan, conventional are okay with. The last thing that is kind of a creative thing that people have been able to do is you can have what's called a non-occupant co-borrower on your loan. And this is what a lot of people call like kiddie condos. You know,
so explain that.
So you, as a parent, if you're wanting to help your child buy their first house,
right,
you can. And it could be both of you on that loan together. And the down payment does go to 5% down. We got to put 5% down. But we kind of take the child's credit score and the parent's credit score and the child's income and the parent's income and combine it all together. And a lot of times then people qualify, and that parent can help that child buy their first house that way. And it doesn't have to necessarily be a child, but...
Well, understood. Yeah, but that's something that I think a lot of people are confused about, so that's good to know.
Yeah, just a great way to help them get their foot in the door.
Absolutely.
Or if you got a family member that's willing to help, it's just a great option.
Very good. Thank you, Kris.
Thank you.